Hello and welcome. Moss Adams is pleased that you joined us for today's session, ESG Reporting Considerations for Government. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenters, Laurie, Tish, and Olga Darlington, both partners here at Moss Adams. Their bios and contact information are located in your webcast console if you would like more information. And now I'd like to turn the floor over to Laurie to get the presentation started.
Great, thank you. I know we've already talked about the introduction, and here's our pictures. Let me keep going. Olga and I are going to be covering a lot of aspects of ESG, which is environmental, social, and governance. Now, I know this is a term that's become very popular, but there may be individuals in the audience that are new to this. So let me spend just a few minutes on talking about what ESG is. It's been called different things over the years, but I think we've landed on ESG as being the most commonly used term. And it's used both in the capital markets and in general use to evaluate corporate behavior and determine, based on that behavior, the future financial performance or the future health of companies. It refers back to a set of criteria that are standards for a company's operations and primarily used by socially conscious investors and how they're going to determine what investments to make. It's also about creating more value with less impact or less harm to the environment. And one of my favorite quotes is, it's a new measure of success. And that goes for not only companies and corporations, but not-for-profit entities, governmental entities, and also geographic locations, counties, states, countries, etc. So as you might have guessed, the environmental, the E of ESG, that criteria really looks at how an entity performs relating to nature and the environment. Social, or the S within ESG, is really how that entity manages the relationships with their own employees, their suppliers, their supply chain, their customers, and also, very important, the communities that they actually serve and operate in. Governance is where we talk about how that entity is managed. The senior executives or senior officials in that entity the board of directors, and the governance, the city council, the county council in our world. Now, up until ESG really became the term of art, we really called what is going on in that area corporate social responsibility, or CSR. And again, a concept whereby the organization really considers the interests of the society that they operate in and the impact of their activities on all of their stakeholders. And we've also historically called the report that comes out of this area either a corporate social responsibility report, a CSR report, you'll hear that referred to. You'll hear sustainability reporting. All of this is really the same. So I may use that a little bit interchangeably, both Olga and I in today's presentation. And just in general, if you hear that concept of sustainability reporting, that is referring back to an ESG type report. So everything we're talking about today kind of gets back to all these different terms. And they have been just changed and evolved over the past few years. And here we are already to our first polling question. And again, this is vitally important if you are a CPA and you want the continuing professional education credit. But of course, we would like everybody to participate even if you're not a CPA. So Danielle, go ahead.
Absolutely. Here we are at our first poll. How much does your organization talk about or place emphasis on ESG? A, extensively, it is a major initiative in our organization. B, some, but it's not a priority. C, we're just starting to discuss it and communicate our strategies and goals. D, not much at all. I'll give you a few moments to respond. To respond, please click on the button next to the answer you choose and hit submit. If you can't see the submit button, please enlarge your slide area. Give you all a few more seconds here. And here are our results.
All right, it looks like this is not what I expected. It's kind of almost evenly matched on here, but a lot of organization, not much at all. And I guess that doesn't surprise me too much. I think the governmental entities, although if you look at your website, you'll see there is probably something on ESG. I think it's still not being talked about organization-wide. I think when I look at the governmental entities that I work with, there's definitely a push on ESG, but it's confined to just a couple of departments. It's not really spreading across the entire organization. And I don't know if that's all that different than the corporate world, but there are some companies out there, of course, that this has been a really a value and an area of emphasis for them for decades. And so that company takes pride that that's what they're known for. So of course you see it there, and we start to see some other companies catching up. But I would say in the governmental arena, it is, although important, and I think there's many departments within governmental entities that focus on it, it's not being communicated across the organization in an effective manner. So that is something just to think about in your own organization about how maybe you could get that communication to be more widespread. So with that, Olga, I think you've got the next section.
Thank you, Laurie. So based on the results of the last polling question, it seems like about 33% or so of you are just not sure that it's talked about within the organization very much. So why is it important? We wanted to provide a little bit of an overview why most organizations, including governments, are getting on board for ESG reporting, or at least some components of it. First of all, customers are factoring ESG practices into their purchasing decisions. This could be retail customers as well as customers of different services that the governments provide as well. Employees and recruits, particularly those coming out of college, are placing higher importance on corporate sustainability and the focus of their employers on ESG practices. Having done many interviews within our firm for new employees, there's always a question comes up that's somehow framed around the ESG priorities of our firm. So if you are performing those interviews, perhaps you have noticed that as well. Stakeholder pressures, especially investors, are looking more into transparency of labor standards, supply chains, and inclusion and diversity efforts of the companies before making those investments and reporting on those investments. There are many cost savings and tax credits available, such as employment and hiring credits, low-income tax credits, energy efficiency credits. So more of those policies are driving organizations towards this of being aware of ESG and being able to report on ESG practices. The regulatory compliance, of course, is the basic premise of when we have to comply with what is prescribed for the organization. So some of those cannot be avoided, but have to be complied with. Recently, SEC came out with a plan for additional disclosures. Of course, that's for public companies. As we all know, whatever happens at the SEC level and the public company reporting eventually trickles down to the rest of the reporting organizations. So we carefully watch those developments and kind of see how those may be translating into all the other entities, financial reporting and non-financial reporting as well. But at the end of the day, it is a way of telling an organizational story. Some of the efforts, non-financial efforts that the organization's undertaking in this space. And for private or public companies, many of them have been issuing ESG reports. Some of them have issued ESG reports for many years. So this is not new practice. But for some organizations, particularly in the government space, you could maybe still be seen as an industry leader, as a first organization in your county or city or state that issues an actual formal ESG report or an audited ESG report. And we'll talk a little bit later in our presentation on the difference between those two. As I mentioned, consumers are being more mindful of where they're putting their dollars. Consumers have a lot of choices as to what services and products they're purchasing, and certainly they're making more aware decisions, conscious decisions on environmental impacts of companies, where they're sourcing their products, what does their supply chain looks like. It's becoming more important for retailers and greening their supply chain and really looking down at their suppliers and getting information on that Scope 3 reporting of where the initial sourcing of materials is coming from and what are the labor practices of their supply chain. This is just a quick summary of Consumer Reports Survey. Once again, what some of the information on how consumers are spending their dollars, what their focus is. As you can see, the higher percentage there is the locally grown. That has become very prevalent all across the United States. We see more and more changing in labels, non-GMO products, no artificial products with hormones and so forth. So as you can see, the percentages are quite high where consumers are making their decisions to spend their dollars on more ESG conscious companies. I did mention employees wanting to work for companies that do have practices in place and focus and policies of the organization on diversity in practice, just the other social components of that ESG. The recent survey from different sources show that 83% of people will trust the company that is more socially responsible. 90% of young professionals would prefer to work for a company that has environmentally friendly workplace. And then 50% of young professionals would actually turn down a job from an employer that doesn't have any ESG policies. So maybe you're noticing that as well in your hiring practices if you're involved there. And that takes us to the second polling question.
Great. Polling question number 2. When interviewing for new employees, does the topic of ESG get addressed in your organization? A, yes. Our candidates frequently bring it up. B, no. We don't typically discuss this during interviews. C, not sure. I don't conduct many interviews. As a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. So I'll leave this up for a few more moments to get a few more responses. And here are our results.
All right, very good. And some of you just are maybe not sure and you are not involved in that recruiting process at your organizations. Maybe you just haven't seen enough interviewees that are interested. It actually surprises me that we don't discuss that question during the interviews, and maybe it just doesn't come up in the government space as much just yet. But as I mentioned, all of the practices that we see in the business world eventually trickle down into non-business operations and organizations. So you may be noticing an uptick in the future. All right. I did mention regulatory compliance earlier. So these are just some of the different regulatory compliance measures that have come out. Compliance with California Transparency and Supply Chain Disclosures, Dodd-Frank Act. Biden administration has proposed additional financial disclosures, particularly on climate risk. That was recent. And as I mentioned earlier, the SEC had proposed a rule that closed comment period earlier in the spring, and is just coming out with additional disclosures in the near future. So the business case for ESG reporting is really, for some organizations, it's increasing the access to capital. The presumption is that transparency and effective management practices enhances the organizational ability to attract long-term capital and favorable financing conditions. General profitability and growth, the presumption there is that the company would be able to identify cost savings opportunities, revenue generation opportunities, and just changes in their organizational structure to gain a few efficiencies to allow for more innovation within the organization. Compliance and risk management factors, just addressing, making sure that all of the reporting requirements, whether they're financial or non-financial disclosure requirements, are all met by the organization to ensure it's in compliance and is not fined for missing any compliance requirements. Reputation and branding is really, once again, establishing yourself as a leader in a space, in the industry, or just in the community. Information measurement and flow is the organizational ability to just gather information across all aspects of the organization. We're all very familiar with the financial reporting. We know where to get the information. We know what systems we have in place, what reports are needed to be collected. But similar just transparencies and parallels can be drawn to ESG reporting. And at the end of the day, that enhances stakeholder relationship, whether it's with the customers of your entity or with just other stakeholders and investors. So how do we get started in implementing a successful ESG strategy? What are some of the areas that the organization would need to focus on? The 5 areas to prioritize in getting started on establishing an ESG strategy is really assessing your organizational readiness, assessing your organizational governance and its ability to make some of those decisions and drive those strategic priorities. Determine what data is available within the organization on which that we could report and provide maybe some verifiable information within the ESG report. And of course, communicate externally as well as internally. What we often see is that the organization does very well in putting certain information on their website or in their annual report, maybe in management discussion and analysis in their financial reports, but not so much sharing that information within the organization. So these are just, we're just suggesting these as starting point for the organizations based on our experience of working with government organizations and non-government organizations, those that are really, really early in their journey of trying to determine their path to ESG reporting. And that starts with determining the readiness, ESG readiness of the organization with the strategic alignment, looking at what is the strategic plan for our organization or a 5-year plan or whatever strategic plan that you may have established, and making sure that the ESG goals that we come up with strategically align with that bigger picture plan for the organization. What are some of the risks that we need to address as part of that process? What is the risk profile organization? Can we afford to not to ignore some of the ESG reporting, or what can we gain? What additional benefits we could gain from providing ESG goals and principles and measurable outcomes of those principles in our external reports? What resources do we have within the organization, or what capacity restraints we may have? Can we just ready up a few people within the organizations to get those reports done, or do we have some holes in our resources and that we need to find specifically strategic individuals or resources to help us with that readiness? And of course, at the end of the day, all of that results or rests with leadership of the organization. And when we take a look at the leadership, it's generally a person with enough authority across the organization that everybody trusts, that has a good understanding of a vision of the organization, that can pull resources from across the organization, has access information to across the organization, and has the influencer status within the organization, as well as having connections within the community or within the stakeholders. Those are the external. When we look at some of the organizations that we have worked with in establishing their ESG practices, it generally starts out with one person being responsible for kind of identifying the ESG goals and trying to come up with measurable outcomes. And that's probably okay as a starting point, but that person needs to have the support of the entire team within the organization. So some of that comes from the internal services. Let's not forget the resources in human resources. Of course, finance and accounting are always important stakeholders in that. IT, procurement departments, risk management departments, those are all important internal services groups that would be tapped to assist with that reporting. Any operations individuals are very important, especially if you are a government that provides services, operational services. So those individuals are very important. And of course, at the end of the day, the broad support from board leadership is important to provide that strategic guidance, really understand what are some of the reporting outcomes and what results they will have on the organization and what story they will tell to those external stakeholders. So the first thing to do is conduct data inventory. We have a lot of information within our organizations on all kinds of metrics that we report internally to management teams, externally to our boards or city councils or county governments. So there is a lot of information available. And of course, we're used to finding that financial information, but there's a lot of operational, non-financial information that could be gathered and used for the ESG reporting. The important thought there is that identifying what could be relevant, and particularly that third bullet point there, if you take nothing else from this slide, is it reportable, repeatable, and auditable? Those are very important aspects of the data we're looking for. It can be just one point of reference. It can be something that can be verified with data. It can be something that's just a statement. It has to be reportable, repeatable, and auditable. And we'll talk about those aspects throughout our presentation. And at the end of the day, we just need to identify what gaps are there in the information that we have. If we are trying to set key performance indicators on which we want to report in our ESG report, what are some of the gaps in the information that exists? What additional reports we need to develop? What additional systems we may need, or access to systems or access to the resources that we need to fill those gaps? And we always talk about the efficiency of the board, board of directors, board of commissioners, city council, whatever the board government, those charged with governance is what we generally call them, that exists for your organization. The reason this is very important is that working with the boards, we sometimes find that the boards don't have the right level of involvement, particularly within the ESG reporting aspect of it. They're either too in the weeds or they're too up high or in reviewing information and kind of rubber stamping some of the decisions without really understanding the impacts, the broader impacts of those decisions. So making sure that they're really engaged, that they really help work with, they have the understanding of the issues and work with the executive management in setting and approving some of those ESG reporting requirements.
Okay, I am going to spend a few moments talking about the report side of things, how you actually tell your story and communicate to all of the stakeholders the characteristics of environmental, social, and governance, key performance indicators and metrics that you want to tell your story with. I mentioned earlier at the top of the hour that there's been a lot of labels and names and ways to refer to ESG. And this is yet another one, the 3 Ps, people, profit, planet. So really, again, indicating the social aspects for people. And this is I like including the profit in here because, of course, none of this can occur. You can't have the ESG characteristics and reporting if your organization is not financially healthy. And as Olga mentioned earlier, there is really a true business case for caring about ESG and reporting on ESG. And trust me, a lot of companies wouldn't be doing this if they still weren't able to make a profit and still be a viable going concern. So we do, underlying all of this is the fact that you do have to be a financially viable organization before you can even start doing this, and it has to be continued. And then, of course, planet really referring to environmental. So you'll see that term triple bottom line, and a lot of times you'll hear economic, environmental, and social. So again, it all does tie back to ESG, but another just thing about the reporting that I wanted to mention to make everybody aware, and not forget the financial bottom line when you're looking at all these other factors. Now, we've spent most of the time so far talking about how great everything is in ESG and all the pros and all the reasons, but I want to spend a moment about how difficult this can be, and also how it's also potentially misused by companies and individuals and entities. First of all, of course, one of the main challenges is it's not necessarily tied back to financial data. I think it should be, and the successful organizations that do tie it together, but when you look at how it's being done across, especially in our country, it is often very divorced from the financial reporting. So you've got one set of departments over here working on what they think the ESG report should say, and it may not have actually anything to do with the general ledger or the financial data or the financial reports that go through. So that's just a challenge. It's not something that could be overcome, but it is a challenge to ESG reporting. You'll see in a moment, I'll walk you through the different set of standards that are out there, because there's numerous different standards. There's not one set that in this country that we follow, which is not necessarily bad. I will talk about the pros to that, but it does, again, cause inconsistency and some challenges. Speaking from the heart of an auditor, verification or audits of those reports are pretty rare. And keep in mind what that means. A lot of times companies can just go out and talk about anything they want or say anything they want, and nobody's really checking the data. And that is called greenwashing. So you'll hear this term within the ESG stakeholder community, and that's really when a company or a brand is using really marketing techniques, and they don't necessarily have a basis in reality for the claims that they make. And I've seen it happen. Our firm does a lot of work for companies that care about this very, very much, and they will engage us to go down the supply chain and what we call, get down to the seed of the ingredient that goes into their ingredients for their products. And I tell you, more often than not, you can't go very far. You get stopped by attorneys. We sign NDAs, but you get stopped and the door is barred, or you get down there. And again, these are companies that are trying to do the right thing, but it's just these claims that many of them make just are not supported. And it's happening everywhere. So greenwashing is alive and well. Be careful what you read. Be careful what you believe when you see these claims. And, it does get back to, can your data be verifiable? Are there internal controls around your data that you're pulling? What are the claims that you're making, and how are you backing those up? And you'll see in a couple minutes that we've got some slides that talk about internal controls, and I'll save it for that conversation, but it's just so important to have transparency and internal controls and data backup to the claims that are being made. And that's probably one of the biggest problems right now with ESG reports, is just that a lot of times they don't have that backup. So buyer beware when it comes to that. Lot of different reporting standards and frameworks. And currently in our country, there is not, or even globally, there's not one single framework. There are countries that do a pretty good job of saying, hey, this is what we're going to do in our country. Australia, Japan, the Netherlands, and the UK to some extent have things that they have put into law about, this is what you're going to do, and this is how you're going to follow it, and these are the standards. There's a lot of great standards out there. I think GRI, Global Reporting Initiative, no matter what industry or business that you're in, you can find some templates and some samples of standards that they put out there for the stakeholders' use. Sustainability Accounting Standards Board in the United States, they have done the same thing. They kind of break it down by industries. Recently, within the past year, the Value Reporting Foundation was formed. That was a joint venture between SASB and the IRC. And that's, again, the same way they're really attempting to show different templates for key performance indicators broken down by the industry that they apply to. Carbon Disclosure Project is one that my clients use a lot. That is an international organization, and it really pertains to greenhouse gas emissions. And they will actually accept report submissions from entities and then give them a grade. And you get more points on your evaluation if your greenhouse gas emissions are actually audited by a CPA. So it's good to see some of, a lot of these frameworks are really encouraging that verification aspect. Now, interestingly though, at least my clients that I've served for a couple of decades, they use their own criteria. So they didn't wait around for a SASB to get invented or, to look to another country to pull those standards, but they really developed, hey, this is what our values are. This is what we want to do. This is what we want to report on. These are the goals we're putting out to the world that we're going to strive to make. And right now, at least, before we have some sort of regulatory standards, that is probably the most common, at least amongst our client base, where the company decides on their own what their goals are going to be, how they're going to measure them, and how they're going to report on them. And so again, I'm not saying that any of these are better than the other, but there's just a lot of options. And, as long as that company is being really true to the way they report to their goals, you can do a mishmash and combine some of the best aspects of some of these frameworks, or just completely develop your own. So a lot of options are out there, which is, in a lot of ways, that is actually a good thing. There's also a lot of variation with how the report is done. So an integrated report is really what the SEC is striving for, or what you'll see, especially in other countries, where the annual report includes not only the audited financial statements, but it would also include the audited ESG data. You'll also see more commonly here in this country, you'll see a standalone ESG or CSR, corporate social responsibility, a sustainability report, where the report's issued on its own and then it may or may not be audited. Greenhouse gas inventories or greenhouse gas emissions or carbon footprint reporting, that environmental aspect, oftentimes those are included in the sustainability report, but because of the uniqueness of the way, very heavily scientific, engineering based, et cetera, a lot of times those are done separately. It's very common to see an ESG report, and then in a kind of under separate cover, you'll see a very detailed greenhouse gas emissions report. So they can be combined or they can be separate. Oftentimes you'll see companies put out their code of conduct, and we'll even do code of conduct audits where we'll look down and we'll look at the supply chain that's, for example, a large retailer may insist that all of the vendors that supply them follow a code of conduct. And then they want an auditor to come in and say, hey, go in and make sure that our supply chain vendors are following the code of conduct that we have put out there. And so many times you'll see that sort of project or report that's really internal to that company, but it's a very valid and valuable part of ESG reporting, especially to that company that's asserting that. Of course, most common, especially among the governmental entities, I have looked, because I did quite a lot of research before we put these slides together to see, hey, what are the governments doing out there? And there's great stuff on the websites as far as these are our goals, this is what we're trying to get to, this is how well we've been doing. And it's really just being done wholly on a website as opposed to, instead of a separate report. So again, a very valid way to do those communications. But beware of greenwashing too, if it's not being audited, if it's not being verified, or if it's not tied to any sort of internal control structure or data structure that's been verified. Of course, product certifications, how often we go to the grocery store now, you're inundated, right, with gluten-free, GMO, organic, all these labels that are on these products. And again, buyer beware, there's probably some greenwashing there, but there's also some certifications that are actually passed through some sort of assessment, and there's others that are really it's just marketing. And so it's very difficult for the consumer to tell the difference. So disclosure of carbon footprint is just, again, I've already mentioned this, really looking at greenhouse gas emissions. And it gets very complicated. There's a lot of engineering and math formulas that go into this, and how to, document it and then audit it. But really looking to the disclosures of the carbon footprint, it is becoming more important when you look at the E of ESG. All right, Olga, I'm going to turn you over to you to talk about how to get started in your ESG journey.
Sure. I actually think we're going to probably try to get in another polling question in before we jump to the next section, just to make sure that we get all of those questions in the time requirement that we need. Danielle?
Absolutely. Let's get that poll question pulled up here.
We need a preview of all of our slides.
Now that we have reviewed the varying KPI metrics and goals for various governmental entities, what are your views on reporting ESG matters? A, I think it's an important area to focus on and report to our stakeholders. B, I'm not sure I agree that it has value. I'd rather see our organization focus on other matters. C, still thinking about it. You do have the option to submit questions for us by using the Q&A window. We have quite a bit of content to cover today, so if we don't have time to respond during the webcast, we'll do our best to follow up with you afterwards.
And of course, this sounds like a little bit of a tricky question because we haven't reviewed the KPIs, because we did jump ahead a little bit, but be sure this is just the answer in your best guess. This is not, there's not a grade for a right answer or not a right answer. We just need to make sure and get your participation in so we can get that CPE to you. So
all right,
we'll take a look at the KPIs right after this.
Fantastic. And here are the results.
Okay, and looks like many of you think that it is an important area to focus on. About the same number of you are thinking about it, and some of you are not sure that that is a priority. Well, let's look at the actual KPIs in this next slide as we're thinking about how do we get started. Deciding on a framework is the important starting point. There is an information overload with most organizations, as I mentioned earlier. There is a lot of different pieces of information that's available on both E, G, and S components of the framework. So narrowing that down and really defining that framework, focusing on maybe 3 to 5 goals to get you started, making sure that information is available, defining those goals, as well as the outcomes for those goals. What are we trying to report on? Demonstrate a connection, once again, between the strategic plan and strategic direction of the organization to these goals. It would be important in the report. Implementing internal control system. We're all familiar with internal control systems for the financial reporting. So this would be a similar framework where you're making sure that the information is accurate, once again, consistently reported or gathered, and included in your report. And consistency between your ESG report and other public reports that you issue, whether it's regulatory reports, whether it's your annual report, where it's just summary information or just information on your website. The one area I wanted to come back to here is the deciding on the framework. Earlier, I mentioned the role of the boards or city councils in the overall kind of process of ESG reporting. And there was a comment that came through that boards are just figurehead leaders. They're not really in touch with the organization's operations. Sometimes they don't really understand the organization. And there is a validity to that point. Most of our boards are either elected officials or appointed officials in the government space. So they do tend to turn often through re-election or reappointment or just changes in government in general. So there is a somewhat of a burden on the governments to really educate their board members, especially incoming board members, on what the organization does, what are the priorities, what have been previous strategic plans and initiatives, and bringing that new board member up to speed. And that takes a little bit of efforts. And we have seen a whole range of possibilities there with some of our organizations that we work with. There's a formal kind of board training that exists as new board members join the organization, and others, it's just kind of like one-on-one, maybe some discussions or kind of learn as you go. So there is a little bit of a burden on the organization, on the government, to make sure that their board members are informed on the correct issues and are able to make decisions, because at the end of the day, they're the ones who often approve certain decisions or approve reports and so forth. So they're really the governing body for the organization. So just the thought there. Deciding on the framework, once again, I kind of talked about this a little bit, looking at what are the KPIs that we want to establish. There's different criteria exist, as Laurie covered. There's different frameworks out there. The most regularly or most often used, the GRI and SASB. But at the end of the day, it's the organization that defines their own KPIs, once again, both based on their priorities, their strategic plan, the information that's available, and the risk profile. So yes, those are kind of internally developed, if you will. Some of the goals and outcomes should be focused on, once again, do we have, before we start deciding on what the KPIs would be, do we have an overall mission statement? What really are we trying to communicate to our stakeholders or customers? Does it align with our strategic plan, mission, and vision? How can we meet those goals? Do we have enough information? Can it be regularly reported, not just in this year's annual report, but if we're establishing it for consistency, maybe we need to make sure that we're able to report on the same goal year after year. And often what we see is that reports focus on positive results. So the organization picks a KPI and it reports on the positive results that it achieved throughout the year. And sometimes those KPIs change in the report from one year to the other. I think what's important for the organizations is to really adopt those 3 to 5 goals, establish those KPIs, and continue reporting on them over time, whether there has been some progress made on those goals, or maybe there wasn't. There's some value in trying to communicate to the public of what are some of the setbacks that cause potentially not meeting a goal that was set initially and reported on. Some potential goals areas. We just included some of the examples here. Some of the more common here in the E category or environmental categories that we often see, of course, is the renewable energy utilization, environmental policies, climate change. There's also other criteria that could be used by government agencies as well. In a social category, diversity, equity, and inclusion is the category that's really stands out right now, and you can hear it pretty much everywhere when you're talking about ESG reporting. But there's other categories, turnover within the organization, human capital investment and development, pay quality, and so forth. And of course, governance. This is where it comes to making sure there is a diversity at the board level, skill set, as well as how the board is represented, executive compensation, if there's any incentives or additional pay that's provided, as well as one important one that's not talked about very often here is the information privacy. And that's the area that we often hear in a negative way in the news, where there is information breaches, whether it's customer information, especially at the government level, or taxpayer information, or the employee information of that organization. And that's the one that seems to be making the news. So. Looking at key performance indicators, of course, the quantifiable measure of how do we evaluate success. And once again, just once we identify the categories that we want to report on, we need to see what information is available to actually set those KPIs in place. I mentioned already about demonstrating the connection between, and this is something that I often see in reading the annual reports of the governments in particular. There's a transmittal letter. If you prepare a formal annual report, there's management discussion analysis, and those reports that precede the financial information often include some of those pieces of, our involvement with the community. Here's some of the things that we're doing for the community, particularly on the social aspect. So there are pieces of that report already exist in the information that we share with our stakeholders. Let's see. I think I'm going to skip through some of these next one, and perhaps we're going to do one more polling question. Some of these are example of KPIs that we already included in earlier, and then we're going to talk about them some more that are specific to governments. So I'm just going to skip through these very quickly so we could get to the next polling questions. Actually, Laurie, do you want to maybe talk about these first, and then we'll do the final polling question?
Yeah, I think we'll be fine. We'll get the question in before the top of the hour. So I did want to just mention, preparing for this presentation, I went through lots of different websites for different governmental entities. And here on the next few slides are just some samples that I pulled off of the websites as far as what are the key performance indicators, what are the goals, what are the metrics that these individual different types of governmental entities are following. And you can see on general government, it's what you'd expect. It's really all over the board because general governments, of course, their reach is wide. Narrowing down into convention centers, of course, they're going to be looking at their procurement and contracts. A lot of convention centers have their own kitchens and dinings and really operate almost as a hotel in a lot of aspects. So they're looking at what's going on in the kitchen, what's going on in purchases of food and beverages. An interesting point about convention centers and for governments is that the Washington State Department of Enterprise Services has recently established the Clean Buildings Act. And so there's a lot of governmental entities scrambling to try to make sure they are going to be compliant with that. So that, of course, falls right into the ESG arena for setting goals and establishing those metrics. Utilities, just as you would imagine, there's a lot of environmental aspects to all of the different types of utilities, anything from their fleet of vehicles to their watershed and wildlife protection, diversion of waste from landfills, recycling, etc. Transit, relating to their buses or their rail and the pollution caused by that. So all different kinds of aspects depending on what type of governmental entity you are as far as what types of KPIs and goals that you would set. Airports and seaports have been dealing with this for obviously many, many years. You see a lot of Superfund sites around seaports, for example, they're working closely with the EPA. Airports have made great strides in recent years as far as reducing the environmental risks and environmental pollution that they generate. We've already done that polling question. So again, we've talked a lot about just demonstrating a connection and making sure that they're relevant to your organization. One thing that we encourage our clients is to set up a dashboard. You know, there's such great technology out there for using dashboards. So at a really user-friendly format where it's at a glance, and you can put in what would be a manageable set of KPIs in that dashboard, and the dashboard can be updated regularly, not just once a year, but monthly, weekly, quarterly, however often your entity feels is important. So dashboards are something that are just really nice way of reporting out on KPIs. You know, we talked a lot about an internal control structure. The data has to be verifiable. An ESG report's not going to hold up to scrutiny unless there's a robust system of internal controls. And we'd like to tell our clients that that structure of internal controls should be just as important and robust for your ESG data as it is for payroll, as it is for revenues, as it is for your financial systems. And anytime that the general ledger or your financial data can link over to the ESG data, all the better, because then that makes it, by its very nature, auditable. So that gets us to our very last polling question. Danielle, do you want to go ahead with that?
Absolutely. Does your entity have robust internal controls that you believe would support reporting of ESG KPIs and metrics? A, yes, and they align with our financial internal controls. B, somewhat, but they can be improved. C, no, any reporting that is done would likely be auditable. And D, not sure. And for those of you who would like a copy of today's slides, you can download them from the folder that says Slide Deck and Handout. We will also be sending the slides via email tomorrow, along with the recording of the webcast. So we'll go ahead and leave this up for a few more moments to get a few more responses. Fantastic, and here are our results.
Yeah, not too much of a surprise. Not sure. That's okay. That is probably normal. And then there's some, I'm pleased to see there's that many that say somewhat, because that's actually a pretty good answer too. All right. I'm going to go pretty quickly through these last few slides. Both Olga and I have talked a lot about just consistency, right? It's important to set those goals, be consistent as you measure them. It's not very impressive if an entity continues to change their goals constantly over a period of time, for example. It's okay to change them, but just, again, have a reason for it, have it explained in your report. Tailoring to your stakeholders, identifying what is important to your entity, and staying authentic to your goals. All those are important in putting together an ESG report. And just the last couple minutes, I'll put a plug in for the role of assurance and why it's important. Obviously, it would discourage greenwashing. It means it's auditable. It means it's verifiable. It really shows that accountability for your data. This is performed by a CPA because CPAs do have the monopoly in all 50 states and 5 territories on actually issuing audit reports or attestation reports. And this is something that can fit right into the auditing standards that we currently have, audits and reviews. And we talked already about the different types of reports that there are. So we can do an examination, which is an audit, or we can do reviews. Usually the greenhouse gas emissions are reviews just because of the inherent uncertainty of the GHG quantification, the engineering statistics, and the math that's involved in there. The audit report looks identical to an audit report to financial statements. It's got the same aspects in it as far as identifying the data, identifying the criteria that was used, and then the opinion. The procedures that we perform when we do an audit of ESG data is, again, exactly the same. We analyze risk, we test the effectiveness of the internal controls, we do interviews of the individuals that are responsible for the data and for the controls. And then we'll come in at the substantive phase and actually do the testing of the documentation and the data itself. And we do send conference. So again, very similar where we're checking with third parties on the validity and accuracy of the data. And to close out, these are the resources that are available. I was mentioning SASB and GRI and the Value Reporting Foundation. And these are the websites that you can go to get that criteria and to get more information if you're interested in this topic. These are really good resources for you to go to. So with that, we are plumb out of time, but we are happy to take questions. If you have put them into the Q&A, we will try to get back to you individually. I think you probably know how to reach me or Olga, and feel free to send us questions through our email or to Moss Adams, and we will get back to you on that. And I want to thank everybody for tuning in today. We were pleased to present this, and more to come. This is a popular topic, and we will definitely include it in our next year's governmental webcast series as well. So with that, thanks everybody, and have a good rest of the day.
Thank you, Laurie and Olga, for a great presentation today. I also want to thank the audience for being engaged and submitting your questions to help guide today's conversation. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. Also, feel free to reach out to our presenters if you have any additional questions. If you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. For those of you that would like a copy of today's slides, you can download them from the folder that says Slide Deck and Handouts. We will also be sending the slides via email tomorrow, along with the recording of the webcast. Finally, here's a link to the online survey for today's presentation. Thank you for joining our webcast. We hope you'll join us again next time. Take care, everybody.